Hey guys, thank you all for joining. Let's give 2 more minutes for other folks to join and then we can start. Hope everyone are doing fine. Uh, please confirm if I am audible and if you're able to see the screen. Am I audible? Can you guys
Yes,
speak?
yes,
Okay. And what
yes,
about
yes,
the
yes.
screen sharing, guys? Can you see the screen?
All okay, all okay.
Great. Give 1 more minute. Let me see how many participants have joined. We have Dhananjay, Raj, Saumik, Sujay, Tiru, Kishore, Rishikesh, Patil. Thank you all. Give 1 more minute because Zoom we have 45 minutes time limit. So 1 or 2 minutes we will give. So by the time others join, so we have around 9 folks here, right? So all of you have trading experience, or all of you are joined new recently to option trading. You can message it. How many of you have 1+ year of experience? Just checking so that we have 45 minutes, right? I just want to modify the content. We have a very less time. So whatever I'm going to share, first I'm going to give you a broad idea on how exactly I trade and how you need to understand the price action. And then when I give my trading setups, you can start trading from tomorrow itself based on these setups and then build on your experience. And if you guys need more sessions, we can always arrange more sessions through our channel in the coming days whenever I'm free. I'll give 1 more minute, 2 minutes up. Just that, once we start, I don't want, people to interrupt me or lose the flow. All right, 3 minutes up, guys. Let's start. Thank you all for joining. Myself, I am Raghavendra, as you know. People call me Raghav. So basically, my primary profession is I'm an IT program manager with Dell. I have overall 17 years of experience. When it comes to option trading, I started stock trading in 2013 and left in 2015 because of personal reasons. I was constructing a new house as well. So overall option trading, pure option trading, I have 3 years. So my first year option trading, probably I might have lost around 4.5 lakhs approximately. But since then, I never turned back. Now, what prompted me to just send out this invite so that, I can share the knowledge. There was an experience which I had last Monday. I will quickly share that and then we can continue it. So one of our guy from our team, he had carried a position, see the screen, on last Friday. Last Friday, he had carried a position. So he carried somewhere here at the beginning. And Monday morning, if you guys recall, Monday morning, there was a 200-point gap down in SGX Nifty. So he pinged me. He said, what's going to happen? I told him SGX Nifty can go 200 points down and Nifty can go up. But please do wait. There might be a pullback and you can exit at cost or with little less loss. Unfortunately, in the very first candle, Nifty pulled back. And he waited till 10:30. I told him if this swing high breaks, market has the potential to go up. Just hold on. So then there was a double top formation. Do you see this double top? This is called a double top formation. Now here, double top formation, I told him double top formations in any market, in uptrend, double top, downtrend, double bottom. 80% of the chances they fail to break. Understand, 80% of the chances. In a trend, it breaks, but in a sideways trend, 80% of the time it fails. See, this is a double top resistance. And if you understand what I'm talking, this is a range. Do you see upside or downside on these 2 days, Friday on Monday? This was upside, but what happened on Monday? So the way you need to see is different, but unfortunately, I told him on the call live market, you have your cost to price. I think it was around 15,800 C he had taken, if I'm not wrong, 800 or 900, 115 was it cost to price. He had his cost to price. He could have exited, but he waited and then he lost 3,000 rupees per lot. Now here, the same experience, as I said, in my first year, I have gone through because I was not able to, I did not have any technical background. I thought, although I did 3 months of preparation, when I entered the market, live market was totally different. So I thought that I'll give some basic idea what exactly is, option trading is, and based on that, you guys can start building your knowledge base from there. Now, whatever I'm sharing here, this chart is pivot. Okay, let me remove the shaded regions. This is nothing but pivot. This is basically what I use for majority of trading. Usually you might have seen I use this as well. This is my price action levels, which falls with pivots, and I just trade using them, and I don't use any indicators, anything. So I do know RSI trading, I do know Fibonacci trading, and I'm well aware of pivots, well aware of support resistance and wolf waves, neo waves and Elliott waves. I have basic idea about gun trading as well. And harmonics, I do know completely about harmonics. Now these things I learned in the first year, my very first year. The reason why I learned and the reason why you are here are same. We believe that once we understand technical analysis, we will be able to read the market, and that is our ticket to make millions or crores in the market. Let me tell you very honestly, anybody can learn technicals, and I can make you a master within next few days in the free session itself. You need not go outside, pay anybody anything. Whatever you want, you post it in the group. If you want to learn harmonics, I can teach you harmonics. You want Fibonacci, I can teach you Fibonacci, and you can choose. Now, basically, the technical analysis in stock market has got only 10% weightage. I was surprised to hear this first. This is as per the statistics across the world. You have technical analysis, you know how to read the market, you make an entry. How many of you wait until you make 1:2 profit, or wait from price to move from one level to next level? Very few, because we are afraid. But we will have the courage to hold our trade when we are losing. When we are losing, we will be waiting for eternal, thinking price will come up, and then we will lose eventually. So the entire objective of this trading session is to help you engage you the market, and see the winning setups the way I used to make the money, and use it for your benefit. Now, quickly, without fail, let's start with the agenda. My first agenda is to explain you what kind of traders are there. So I will be sharing the setups, but this is very important. So when you see these pivots, or when you see these price action patterns, or these levels, everything, so you will see lines, lot of several lines. Or you go here, put gun fan or Fibonacci. Okay, I put a swing here. I'll tell you, okay, market in an uptrend always retraces to 38.2%, takes support and goes up. Most of the people knows this, but why exactly market is taking support here at 38.2%? Or this is pivot. Why exactly at the central pivot market needs to take support and then go up? The reason is because traders like you and me are making the decision to buy there, and making the decision to sell near these double tops. That is the reason why market goes down. Make no mistake, there are people who are trading here for decades. They are veterans. We have FIIs, we have DIIs, we have pros, we have individual traders. Say in our own group, we have Muzaffar, perpetual bear. If you don't know, he's a wonderful trader. His profession itself is trading. If you have seen his lot size, you would understand. Now, how does these people trade and make money? And how do I trade and make money? The reason is we understand what are the pain points. Like I said, 1%, like you guys enter here thinking it will break the double top, but I will enter here and short because I know your pain point. The moment this goes become red or starts going down, you guys will exit in panic or you guys will still be holding, and people like me will start putting more entries here. So what does that create? That creates more weakness in the market. To understand that, you need to understand what kind of participants are there. I'll give you a simple example. Let's say one of you are very fond of eating lobsters. So you want to eat lobster. So the lobster price, and by the way, whatever examples I'm giving, I have taken these examples from Secret of Pivot Boss by Frank Ochoa, and the other one is from YTZ Price Action Trader. So a couple of examples. I did not want to reintroduce the wheel because this matches whatever we are talking here. So there's you one of you like lobsters in the market. You want to go ahead and buy a lobster, but lobsters are very expensive. Let's assume you go into any hotel, the simple medium-sized lobster will cost around 3,000 to 4,000. So what you do is you wait, and when the overall lobster price drops, you go buy some in bulk, store it in your freezer, keep eating. Okay. Now, what exactly this person is doing? This person is reacting to the price. Means what is he reacting? He is reacting when the price goes down, he goes and buys in bulk. When the price goes high, he's just stopping, waiting. Okay. So this kind of traders are called as responsive traders. He responds to the price. Now assume we have a situation where lobster price okay, wait, let me give another example. Lobster price becomes very expensive. Okay, it becomes very expensive. The reason why it is becoming expensive is because somebody says that for next 1 year or 6 months you won't be able to get any lobsters. Reason being the supply is shut down and you won't be able to eat any lobsters. Can you, I mean, this is the last, what do you call, batch of lobsters we have in the market. Now what does this person do? Now this person who was very price sensitive, whenever the lobster was going down, he used to go and buy in bulk. Now what does this person will do? The lobster which was costing $10 might be costing $25, $30. Now this person will not care because he loves lobsters. Even if it is $30, he will go ahead and buy here. People like him start buying here. What happens to the price? Price starts going up, 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 right? Now this kind of person, what is he doing here? He's taking an initiative to buy the lobster, even if it is costing one to double, one to triple, he does not care. He will just go ahead and buy. So like this, these called as initiative participant. He might be an initiative participant or he might be an initiative seller like this. Now, why I'm telling this is we all belong to these categories of traders. Okay, why I'm telling this is most of the time when you people are trading, you have this psychology. Oh, someone is raising the price. What if market falls? Oh, somebody is playing with me. So if I am stuck here, what will happen to my money? I want to bust that myth. I want to bust that myth. Reason being, in stock market, market is not personal. Whoever is buyer, he might be a multimillionaire, he might be a big FII, or he might be a big institutions like mutual funds or HDFC Bank. But still, they are belong to these two categories. Got it? One is responsive, who is very price sensitive. Price sensitive people trade in range. See, this is the range. When price goes up, he will sell. When price comes down, he will buy. So they don't have the energy or the liquidity to take the price beyond this breakout. Okay, that is you and me. Right, people who can take the price down are the FIIs or smart money or people who are responsive buyers. They don't care. So The whole price action game is played by identifying what kind of trader is in the market. Say if you want to trade in this market, how do you want to trade? So I know these are all advanced concepts. Take it easy. If you need, I will be arranging more sessions. But once you understand this, then whatever call I'm giving, like Friday morning, I gave a call here on Nifty. Nifty Friday morning, I gave a call. I'll explain you. Not many of you took the call, but I'm explaining what kind of traders are here. Do you understand what kind of traders? They are price sensitive traders. When price goes up, they sell, price comes down, they buy. These people don't have the energy to take the price beyond the market. See here, same thing happened. They tried to break the CPR. They were able to take only 2 candles and then they brought down. Now this is called as auction. Somebody is bidding, somebody is selling. Okay. In a simple way, in 1 minute, I would like to give another example and then quickly I'll go with the pivot straight away. Assume that you want to buy a house. There is one house in a prime market. All 16 people who are in currently in our trading session are bidders for that house. It's a prime location. Now, what will happen to the price of that house? Will it go up or will it come down? The price of the house obviously goes up. Okay, it keeps going up. Why? What is the supply here? The supply is only one house. What is the demand? All 16 of us are bidding for that house. When demand is high, so when demand overcomes supply, price always goes up. You need to train your mind to look that way. Now imagine another scenario. Okay, there are 3 houses in the same locality and there is only one person. I am the one who is interested to buy one of the house in this locality. There's only one person. I am the one who wants to buy. Look at it this way. 3 houses, supply is high. What about the demand? I am the only one person. Now what will happen to the price? All these 3 suppliers or sellers should compete to sell a product to me. So the prices will obviously come down until unless someone tells, no, I cannot sell beyond this lesser price, or until I agree to buy one of the house. So here supply is overcoming demand, because of which price is dropping. See here, boom, supply overcame demand, price dropped. Same here in this locality, demand overcomes supply, price raised. Now this entire market, all these lines is based on trading decisions. Now we watch lines, we watch candles, we watch a lot of supports and resistance and things. Okay, this is a green candle, prices are going up. Very important, guys, I'm stressing here. Understand that who is making this decision. When you think that way, you will easily able to crack the market structure and make money. Now here I come, I know all 15 of you people, I'm sorry, I'm just giving an example since I'm experienced, don't take it personal. Know that, okay, this double top is broken here and people wants to enter here. A smart person like me, what I'll do is my selling when the reversal pin bar happens here, this is called a evening star. Don't bother about all the names. I will give a pattern as well. I will short here. Double top is broken. This is day's high. Near the day's high, I have a morning star. I am shorting here. How many of you will have the guts to short here? Now, this is the market structure. A selling area always becomes a selling area. A buying area always becomes a buying area. Now, if you understand this concept, okay, until unless you are proven wrong, 80% market is played on probability. There is no 100% foolproof here. But what is guarantee here is the high probability. When you understand these things, you will be able to easily decipher the market. Now see, this is the naked chart. I keep giving. This is the morning high. Where did the market went down? Next day, where is the market facing resistance? Same concept, Friday. Where is the resistance? Now tell me, do you need any indicator to read this? You don't need obviously any indicator to read this. The way you understand, what does this say? This wick. So this is a candle. Prices morning, if you remember recent example, bears went down, boom, 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 boom. They pushed the price down even below previous day low, which is a highly bearish sign. But look what happened. Bulls came, the buyers came. They started pushing the price very high. Now forget about it. Then market came down. Where do you see the buying pressure? And where do you see it starts, bulls are going up. So a previous buying area where buyers are existing will always become a buyer's area. Now this morning, why it happened about buy area? See what happened previous day. Market came down, 1, 2, 3, 4, 5 red candles. You have a morning star here, big green candle. Next day, what happens? And below this, what do you see here? So always while trading, understand that you have to watch the left-hand side to take your trade. So if I am here, I will watch my left-hand side. Okay, this is where I made 3,000. I was on a 2.5 hour meeting on Friday. I shared the profit trading as well. I did not go with the huge lots. I did take 2 trades because I was in a meeting, but I did take a trade here. Why? The reason was this was the first weakness. But market is in uptrend. I'll tell you how to identify trend as well. Then we had sidebars doji, and this was the third weakness. And below these lines, when this red candle closed, I knew market is going down. Some people take trade here, risky traders, highly professional. Why they take trade here is not because they know they are going to make money. Nobody knows. Until you make money, nobody knows you're making money. But they see a high probability trade here, and they put their stop loss just above this. Because if this fails, the stop loss is very tight and they can go a counter trade because it's already broken the high of the day, and this is the previous day resistance, and they have a high probability of price going high and make 1:2 or 1:4 profit. So they don't mind losing little bit of money. So understand that trading is a probability, and the sooner you accept the risk. What is the risk? Okay, for my 1 rupee risk, I'm entering a trade here. So for my 1 rupee or for my 1,000 rupees risk, I need to get 2,000 rupees profit. This should be a trading mindset while trading. Okay, I'm removing everything. Let me quickly see whether I have covered the agenda. My agenda was what kind of traders. So hope you understood what kind of traders. There are 2 kinds of traders. One is price sensitive. One is initiated trader who can take price to new level. So you can consider this initiated traders as that big trader or the smart money. So you know when you need to enter the money. Risk acceptance, supply demand is done. Now, what is this pivot? Okay, we have another 15 minutes. Let me quickly tell this. What are these pivots? Now, pivots are based on a kind of futuristic price analysis indicator. It is still an indicator, but this is not a lagging indicator. It is a leading indicator. Means you know if price breaks CPR, it can go to R1, it can go to R2, it can go to R3, or it can go to S2, S3. Now this indicator was introduced in 1930 in USA, and then it became very popular after Secret of Pivot Boss book. The reason being that this is based on price action. Why it is based on price action is it is always the formula used to calculate pivots are based on the previous day high, close, and low. So that's the reason why price tends to respect these pivot levels. And again, don't think that they respect these lines because they are there, because people like me, you, and thousands of traders watch these pivots. They know where the resistance is and they know where to remove the money. That's the reason these things work. Now, why are they very important? Now, they are very important because this is like a GPRS in your stock market. You can identify how a trade is unfolding in front of your eyes and take high probability trades. Rather than naked charts, when you have pivot, you feel more confident there. Now, in this pivot, the very important area is CPR. I keep telling about CPR. CPR is called as the heartbeat of this pivot. It is a range. Why it is a range is because they have added the additional formula, and out of all these pivot support and resistance, this acts the strongest. This is the strongest. And I'll give you some idea why it is strongest, etc. Now in this CPR, there are three things. This is the central pivot, which you find in Zerodha everywhere. In trading view, you have the upper CPR and lower CPR. Very important, and I mean, make a note of this. The upper CPR belongs to bulls, lower CPR belongs to sellers or bears. When price is in between is a dead zone. You won't be having any move, even if the CPR is 50 points up, okay? You have to understand that. Now imagine upper CPR is broken in this candle. The follow-up candle, 80% of the time will be green. So if somebody taking upper CPR breakout, he has a high probability of scalping candles for next 5 minutes or 10 minutes on a trend way. Similarly, when a lower CPR is broken, the next candle will be red. You can watch anywhere. Add to this to your trading. So where you have to enter, the trading locations are very important. Now, since we have very less time, I'm going a little faster, but just try to observe what you can, because I'm explaining you how I trade. And then if you want, we can have an elaborate session. These are all advanced concepts. It needs at least minimum 4-5 sessions to, learn. Why I decided to have this session today is from tomorrow when I give a call, or RP gives a call, or Muzaffar, Praveen, anybody gives a call, you can use this method to understand whether their calls have high probability and take the trade. Understood? Okay. See here, market comes down, CPR is acting as a strong support. A big green bar breaks. As said, this belongs to bulls. See here, it went up. So far, so good. Any questions? I'm going to pass for a minute. If you have any questions, you can ask. I'll continue.
Hi, Raghav. Which type of pivot are you using? I like standard or some gorilla
It's
something.
standard. No,
Any type
this
is
is
there, right?
standard. I use only standard. There is Cambilla pivots as well. I can take a separate session, but both works in a similar way. Cambilla slightly different because everything is resistance there, but in pivot, everything acts as support and resistance here. Now this is standard pivot. Standard pivot,
Okay, thank you.
and what I have used here is, see, there are weekly pivots, monthly pivots. Okay, let me show how exactly it looks. Okay. Uh, there are weekly, monthly, and daily pivots, right? So this is how it looks. Remove all the moving averages. Now, when you go with so many pivots, you will obviously be very confused. So that is the reason I explained you the price action. Although I wanted to go ahead with depth analysis, how the auction process happens for you guys to understand very clearly how buying, selling happens. But anyway, we can do it some other day. But do you guys understand? If you come here, see, this is monthly pivots. Then we have a overlapping weekly central pivot. There will be too much of lines. So at the initial stage, you stick to this. This is what I use. And then always understand that you don't need any indicator. So I told you we have a morning star, but when you look on the left-hand side, you will see why exactly it was acting as a resistance. You have a double top here, and the double top acted as a resistance. Where was the previous sell zone, guys? Previous sell zone was here. Do you see any breakout of the sell zone in between Friday's breakout and on 27th July breakout? When you see here, you will clearly understand. Most of the people miss out this because they are so engrossed with indicators or what is happening on this 5 minutes. That is the reason I'm telling you. Always watch on the left hand side. It might be same day double top, previous day double top, or last 3 days double top. All I'm taking is fresh areas. These are a fresh area. This double top was never broken up. That is the reason why base were waiting here. They dropped, price went down. So this pivots, what does this pivots do? So you obviously, most of you are not so experienced. So you guys can use this pivot. What is happening pivot? R2 is a resistance. What happened near R2? First candle showed weakness, then bulls try to pull up, and then you have a reversal bar. Then market went boom. Understood? Okay, how many more minutes we have? I think we have 10 more minutes. Okay, quickly guys, very quickly. I just want to give some setups. Don't neglect these. This is straight away from pivots. Now there are so many candle types. So the other settings we can take later, but this is very, very important. Based on these candles, I blindly take trade. Okay. Now we have, this is called as wick reversal candles. So what is a wick reversal candle? I explained you. This is the first red bar. And when buying starts happens, buying pressure takes this and make it a T bar, pin bar, people call gravestone, doji, hanging man, or a hammer, whatever they call. Even I myself don't know the names, but understand reversal wicks will be this kind of candles. What is the psychology behind this reversal wick is, earlier this was a red candle like this, stage 1. Stage 2, somebody started buying. Stage 3, they pushed it up. Now in this candle, who is strong? Bulls are strong. So in a chart, in a pivot, when these kinds of candle happens, considering this alone with the trend, you can trade and make money. This is wick reversal, understand. Now this is called extreme reversal setup. It keeps happening. Now wick reversal, what do you see here? Most of you have seen me taking trade in first 5 minutes. I will give you the first 5 minutes trades as well. This is one of the thing I'm explaining you. What do you see here? You had 1 week. Why I did not take the trade here? The reason why I did not take the trade was this was a double top. Market has a double top. So usually this alone, if it forms at previous day high or above R1, you can blindly take the trade, keeping the stop loss below this or at midpoint and target R2. Those setups comes next, but try to understand these price action candles. And when I give you the setup, there are around 10-20 setups. I don't know which I trade, and you can just memorize it and keep trading them. Second, we have a red bar, and third one, a small red top. This was the candle I was waiting for, and this is where I took my trade. I took around 1,000 quantities. Look where it hit, R1 pivot. So one setup, understand, wick reversal candle at the beginning of the day. See, I'm not a trainer basically, so I haven't made any trading materials. I just use some PPT to, quicken the process. We had only 40 minutes. Now, I think there are 6 minutes more. I have 4 more candle types. So, and the charts, and then I have got around maybe 7 to 8 trading strategies where I usually take trades. But in 6 minutes, I may not be able to cover it. Would you guys be interested to have one more session later in the day? Or would you guys want this next Sunday? Quick poll. Can you guys message me? If you want today, I can cover it. Probably not sure who uses Zoom. Not sure if RP is there. Just wanted to see, can I send out another invite?
Yeah, Raghav, I'm here. So,
Hey,
currently, I think people are ready. Maybe later in the day we can have the session.
We can't have back to back, right? I think I may have to wait for some time. Is there any rule like that?
I think once it completes, we can rejoin the same link.
Super. Okay, perfect. We can do it that way, guys. So if in case if it completes in next 5 minutes, we'll rejoin and finish it. Okay.
Yeah.
Okay, this is wick reversal. The current candlestick patterns which I'm explaining covers all the candles here, everything. Say for example, let me give you an example. Okay, see here, this portion. In this portion, what happens? The way you need to understand is, this is very important when you're trading. You visualize very strongly. So we had a green bar, green bar, green bar. Then we had a red bar, red bar, red bar. Market kept going down. I'm talking about this portion. What happened was, initially it was a green bar, one big green bar. Then bull pushed it down. Now what do you see? This is similar to a T bar, wick reversal. Are you getting it? See here. You need not see a T bar in 5 minutes, but even while trading, when you visualize this entire buying was wiped out by entire selling. So this entire buying was wiped out here. So who is stronger at this stage? The way you need to see here is, till R1 was a resistance. After R1 resistance was broken, somebody is talking. Can you go on mute, please? Market went up, faced resistance near R2. And then when the same resistance was broken down, there was a higher chances of market going down. This is the way you need to understand. Can you guys mute whoever is talking?
Can you please force mute Srini?
Srini, is it? Mute. Perfect. So understood, guys. So this is the power of candles. So when you understand with the context, means overall what is unfolding you, this T bar or wick reversal is not 5 minutes. You can visualize it at half an hour, 30 minutes, 1 hour. Maybe you can go and visualize higher time frame, or if you don't have higher time frame, just on the market visualize what is happening. Now this is one of the key practices which you need to make to understand which side is winning, whether buyers are winning, sellers are winning, especially when you are in a range. Now this is the second one. This is called as extreme reversal setup. I trade this. I mean, all these setups, okay, it is in pivot boss, but the example which I'm giving, it is purely by my trading experience which I'm giving. I do trade this wick reversal. So the psychology behind this is like a overbought or overstretched scenario. You know, if somebody uses RSI stochastic, you know, we are in overbought zone or oversold zone. The sentiment of this pattern is, it's an overbought zone. So usually if it is a complete bullish candle, you know, about 95% candle closing, understand that it's a Morobuzo candle. There is a lot of bullish trend. You may have to wait more 10-15 minutes to see the pattern, because market can go up. But what we are talking is a reversal setup. So technically, if it is around 50% body or 70% or even 80% of the body, it qualifies for this wick reversal. So after a wick reversal, you see a opposite side of a candle. It might be small, it might be big. So usually we call this as what? Harami pattern, right? Or a bearish Harami pattern, or whatever, if it is formed at the center. It's a similar concept. Now this has a very high probability, and it's a frequent occurrence in Bank Nifty and Nifty. Okay, very frequently it keeps happening. And when this happens near a pivot or resistance, Most of the buyers and sellers read this and they go down. Do you see this day before yesterday? Even yesterday it happened, I believe. I think if I go to 15 minutes, see this one, just this two. Almost a week reversal. You have a big candle, then a red candle. And where is this happening? Near R2. Got it. So when you see these kind of patterns, you need to understand, okay, market is reversing. Market will reverse. And where will it reverse? It will reverse to the recent low. That is all. It's like he calls Frank Ochoa and secret pivots of, secrets of pivot boss. He calls it rubber band strategy. See here where it came. It comes back to the previous level. Here where it came, come back to the previous level. It does not have the energy to take it too low, but it comes back to the previous level. See, here is one more. See this big red candle and followed by a small green candle, a wick reversal. It goes back to the normal level. Got it. So when you combine this with the with pivots, you have higher probability. That is what I'm trying to explain you. And purely based on this, I keep taking the trades. Now this is called as outside reversal. So you might have seen I keep posting telling that I consider week to week for engulfing. So market goes down, you have an engulfing candle, but the engulfing candle, a typical engulfing candle means the body should engulf the previous candle completely, not the wick. But this outside reversal, the criteria is when this happens at the top or at the bottom. What is the psychology behind this? Okay, here market is going down. In this candle, market went below this, right? Market went below this, but then there was a strong buying pressure and it closed above the previous red candle or above the previous bear candle. Now, what exactly the psychology is telling is base tested the low of this bear candle to see if there is any weakness persisting. Now understand, all of us here are hundreds of people, majority of the people in the market are bearish. When this candle goes below, it will just boom, goes down. So they just tested a little to see whether there is any weakness in the market to take the price further down. But unfortunately, market did not have the weakness. So bulls were waiting down to buy it. So this is again a very high probability, above 80 to 90% probability is there in this. And when this happens at the higher bottom, market just goes up. Understood. This is called as wick reversal. This is again a frequent happening in Nifty, Bank Nifty. Okay. So what is the last one? I think 3. Yeah, this is the last one. Doji. Now you guys all know Doji. What is Doji? Everybody knows about Doji. But when you see Doji, nobody utilizes it. Okay, see what is happening here near the resistance. Okay, come here. What is happening near these resistances? Several times near the resistance. S1 resistance. You see all these candles in pivots near support, near resistance, near Fibonacci levels. Now, what exactly this Doji tells? It is the highest level of indecision between buyers and sellers. Now, you guys know this market level was broken, right? This resistance was broken. So on top of this resistance broken, we know bulls are going high. We had 3 green candle, 3 white soldiers. Okay. All of a sudden, we are seeing back to back 2 dojis. What does it signify? Do you need any indicator to tell you this? Market broke the resistance. It's in uptrend, but near R2 resistance, we have 1, 2, 3, 4, 3 small candles try to withdraw and then 2 dojis. What does happen here? The psychology which happens here is most of the people like me or experienced pros, once we saw this, we book our profit. When we book our profit, what happens to the price? Imagine the supply demand. One house, multiple people bidding for it, demand is high. All of a sudden supply is increasing, right? When we start booking the profit, what happens in the market? There is more supply comes. Now no longer people are willing to buy at the higher price. So looking at this weakness, people who were bidding at higher price, what will they do? They will lower their bidding price. They are not buying, mind it, but they will lower their bidding price. Earlier people entering here booking profit, plus the new people who wanted to buy bidding lower, what will happen? More supply will be happening in the market, creating a weakness. All of a sudden, this entire demand is overtaken by the supply. Now supply is more. This candle nails it. Then what happens? Everybody books profit, and people like me or professional traders who booked profit here will become a shorters. Who will be caught here? People who are novice, who are less experienced, they are caught here because I can see your pain, because you will still be waiting thinking that market will break this. But I have already booked my profit. I have taken short side. New traders who wanted to buy long, they have also taken short side. So entire thing creates a weakness, price booms, supply overcoming demand. Do you understand how exactly you need to read the candles? You don't need any big things, fancy thing. If you understand these concepts, you can trade with pivots. I think we all are still there, right? I thought market may link may get disconnected. So this doji, when this doji happens at high and low again, at very high and low on any time frame, signifies indecision in the market. There is a pause. People don't know whether to go down or go up. So the high probability for a doji trade to take place is why I said here we have two dojis. But with this reversal pin bar, I'm not taking trade. If the reversal pin bar was all alone, by experience, I'll take trade. I will read it. But as a beginner, understand we have two doji. So it is safe for a bear candle to close below these two dojis so that then you can take the trade. What will be a stop loss? You can keep the stop loss above R2 resistance because R2 will act as resistance. And if R2 resistance is broken, your stop loss is hardly around 10 points. You can take a counter trade quickly. Now, this is exactly you have to trade. The stop loss should be so close. It should define whether the trend is reversing or whether trend is intact. So when you take short here, if your stop loss hits, you can just enter on the trend and make money. Now, assume you're entering short here. What will be your stop loss? The stop loss will be very big. So there, I mean, we can keep on talking on these concepts. Now, hope you understood the 4 strong candle patterns. Now, these are the patterns you need to visualize everything. So from here, market went up. From here, market came down. Okay. What does it look like? It looks like one big red bar with a selling pressure at the top on daily candle. Now for this, you don't need to check daily candle. This is how you need to visualize. So suppose if this was at 220, if this had happened at 2 p.m. or 1 p.m., then market had more potential to go down. So this is the overall concept of price action. Now I would want to share how exactly I trade. Now there are some trading setups which I would like to tell you, but I don't know whether call will disconnect. We'll wait for 1 more minute, or shall I disconnect and share the link again? We'll just quickly go through where is my entry, exit, what is my patterns, and then you guys can enjoy your Sunday.
Raghav, I had received a pop that this meeting has no time bound, so I think we can continue more.
Okay.
Yeah.
I was just talking a little fast, guys. Okay. Now, first setup you understood, right? Pin bar setup. The lower CPR belongs to bears, higher CPR belongs to bulls. Now, based on pivots, any market, whether it's Nifty, Bank Nifty, stocks, equity, anywhere, whenever a price opens between R1 and these green dots are previous day high, or between S1 or previous day low, it has a high probability of price coming back and testing the CPR like this. This opened between R1 and CPR. Now, ideally, I would like this to have a resistance near previous day high or previous day low. When this resistance happens within the first 5 minutes, it has a possibility of coming and testing CPR. I'll show you an example. This is the most commonest pattern. See this one. Price opens between CPR and R1. This small dash is where price opened. Okay. First 5 minutes. Price rallies. This is previous day high. It also breaks it. Whenever a previous day breaks it, you have a high chances. Okay, I remembered one more thing. Now the next red candle touches R1, faces green. Okay, just assume that the safe players usually go low of first 5 minutes candle, but this is a very big candle, so you can take a trade here, keeping R1 as high, stop loss and target CPR. But what happens next? Okay, market just goes up. Again, it faces the resistance, but eventually it tests CPR. Now, this probability will happen within first 1 hour. This setup I am talking. Now, this candle should have come and hit the CPR within first 1 hour. So you can mark this as, I don't know, you can give a name and mark price opening between R1 and CPR, or previous day high end CPR, or previous day S and previous day low CPR. Okay. I'll give you more examples here. See this one. Okay, this opened here. This is above R1. This happens every month, every week. All you need to do is you need to keep a watch. So last 1 month we were in range, right? That's the reason we are not seeing. We had a very tight range. Just hold on. This is a very commonest occurrence. We had a lot of prices opening from CPR. Breakout, CPR. See this one. This is a extreme scenario. I'm not talking about this, but still this qualifies because we have a very big gap. But see where exactly it faced resistance near R1 and it came and hit CPR. I was talking about within 1 hour. Okay, within 1 hour, where you have high probability. The trades which I take, right? These are all based on this. Okay, see this one. Price opens above R1, comes down, double top, CPR. This qualifies. This qualifies somewhat similar. You guys can do back testing as well. Since I don't have time bound, I'm just trying to see more example. Okay. Okay, see this one. Price between R1 and CPR comes down. So most of the times the criteria for this price needs to open between R1 and CPR. See here, R1 and CPR. You have a very high probability. Why R1 and CPR? Why this setup? Why I'm telling this? Because the stop loss is very close by. So I am taking a trade in the initial first 5 minutes or 15 minutes. And my first 5 minutes and 15 minutes is the day's high. If it is above R1, if it is around S1, it is the day's low. So what will be my stop loss? Any candle breaking that. So my stop loss is very low. So you have to decide, guys, if you are new people, right? Stop loss is a must. So for my 10,000 risk, I have 20,000 profit, or I have 50,000 profit, or I might have 15,000 profit. This is the way you have to think. But you can do back testing on your own. Okay, just in the interest of time, I'm telling you, you can market price opening between R1 S1, R1 CPR, S1 CPR. You can keep price facing here also. Now, what is the next one? The very next one is Same price opening near R1 S1 or near previous day high, previous day S1. Now you need to understand, remember I told you the two types of traders, an initiative traders and responsive traders. Responsive trader is someone who trades within the range, the rubber band strategy. All these are responsive traders. The initiative traders, where do you see these initiative traders coming in? How do you identify this smart money coming into the market? So you have a big question, how you want to catch the big trend? Always smart money or the initiative participants who wants to buy the lobster at any price, even in black market, they will be staying above the previous day range. See, this is the previous day range. Always you have a breakout in Nifty, Bank Nifty especially, they will be always above the previous day range. We call it as a previous day value area high, value area low. I mean, we have different concepts. It's a different study altogether, but with pivots above R1 or above previous day. Look what happened here. Previous day low. What do you see? Whenever a previous day low is broken, above S1, smart money is here. They take the price down. It go to S2, it goes to S3. Bank Nifty, you have this examples because Bank Nifty can hit S1, S2, S3. Bank Nifty is in range for several days. Okay. Previous day high, break, failed breakout, no smart money, came back. Previous day R1 and previous day high, no smart money, came back to CPR. So do you understand the psychology behind the second and third trading strategy I'm explaining? You remember the first strategy is scalping. Whenever a bull break the top CPR, the next candle ideally will be a bull candle majority of the times. And with the context, you can go for long trends here. See, came down, boom, tested, went up. This is the first method. Similarly, lower CPR, whenever a bear breaks it, you have more probability of the follow-up candle where you can take immediately. This is for scalping in 5 minutes. Okay. But these two methods, what I'm telling, price opening near previous day high R1, testing CPR is based on the rejection of smart money. That is a psychology. They're just not numbers, which means price opened here, came R1. There are only responsive buyers like you and me who think this price is very high. This price is very high. Let's short and buy near CPR or buy near S1. This is the way we are thinking about these pivots. Once this R1, that is where the smart money comes who can break this. When this break happens, the target should be R2. This is your second strategy. Got it? Same. So, I mean, I thought of telling this because it's easier to identify. One is price opening near previous day high R1, rejection, target CPR. Price opening near R1, S1, acceptance, target R2. I'll show you an example. It was in Nifty. Very recently, we had this. See this one. Price of, I'm sorry, this is R1. Hold on. There was a very example where price itself opened. I was checking yesterday. Okay, see here. Price opened above R1 and previous day high. Look what happens. It's a solid pin bar. Ideally, if you have a green bar or a pin bar. Okay. What is this pin bar? It's the same pin bar which we discussed in this candle. Do you recognize? What is the psychology behind this pin bar? Price opens above previous day high R1. Whenever in the first 5 minutes only, price is opening here. Now you should know, okay, today might be a breakout day. Prices will go up because this area belongs to smart money people or somebody who wants to pay anything to take the price high. And when you see this kind of pin bar, solid pin bar, you definitely know there is a lot of buying pressure. People are just buying. They are not allowing price to fall. It was evident. Second candle, they tried to, this was your buy area. Look what happened. Target is R2, R1 to R2. Similarly, see here, same, reverse. Price opens above previous day high, near R1. We have almost half body and the follow-up candle was red. When this happens near the resistance, wait. The next candle closes below this. Take the next candle. Look what happened. CPR is tested. Understood? So how many strategies we covered? 3, right? All 3 in the first opening 5 minutes, you can identify this. One is price is accepting near the previous day high. One is price getting rejected the previous day low. Okay. The third one, this happens once or twice in a month, which happened very recently. See this one. It happened both in Bank Nifty and Nifty. When a price is originating from the CPR, the first 5 minutes candle, imagine the price should be coming from the central CPR. I'm not talking about previous day high, previous day low, anything. A central CPR, maybe even with a half of this body, decent candle. That day will be a trendy day. You can go back test it. The price should be originating from the CPR. This is almost CPR, Bank Nifty, Nifty. So for the first half of the day, it keeps on continuing in Bank Nifty. I have seen, I mean, it can go on till 2 p.m., 3 p.m. How are you going to identify this? First, we need to identify this based on what kind of market we are in. Okay. What kind of market we are in? Although we are playing intraday, we are in a sideways market since 1st of June. So hence this was half of the day, but go back like 3-4 months back or 4-5 months back, you keep on testing. If you do back testing, you will gain more and more confidence. Understood? This is the third setup which I'm telling you. Price coming from the CPR. This is purely based on experience, guys. So, I mean, it's all my hard work. Just ensure it. And look what here. See, the moment I see, I know. Do you see this? Do you recognize this? Inside bar or extreme reversal. You have one green bar trying to break the upper CPR, then the price is pushed down. Now, this happening near the CPR makes the pivots very, very important. When you see this, if this is happening somewhere in naked also, based on experience, I know market is going down. But when you see these things, right? Trend is down, market has pulled back, and then you find an inside bar. High probability of market again going down. So for example, you have missed all this trend. Market is going up. So most of the time, what happens is this big candle like overbought, right? This is overbought. This is trying to capitalize on the psychology of the trader. Like even I have done this, and a lot of all the traders would have done this. So when you're trading, we have missed this trend, maybe because of fear or greed or what. We have missed the trend. Whenever a trendy day happens, tell me honestly, how many of you are itching to take the counter trade? Majority of them. In my first year, I have lost more money taking counter trades on a trendy day. This is trading psychology. Why it's called a trading psychology is because as a person, we have missed the trend. It was such a beautiful trend. We saw it, but we did not take the trade because of fear. Now, subconsciously, even if you're bad, subconsciously, we want to take the revenge on the market, or we want to capitalize on the reversal. But that is where we tend to capitalize. Now, this outside reversal candle. Outside reversal, right? Yeah. Takes care of that psychology. It raises price high, 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 high. Everybody enters, CPR is broken. Then you get opposite color inside bar. Okay. It's from outside, it's reversing. Outside means overbought area, consider it as oversold area. And this is your key to take the trade so that market again reverses back and continue its direction. If it's a equity, we could have taken entered here and waited till here because it's continuing. So that is the psychology of this outside reversal. Understood. So trading, taking near CPR, near previous day high low, acceptance, rejections. Okay, these three things. And I don't know whether I did say anything else. Do we have Praveen? Praveen, you there? We're discussing something. Okay, this is another trading. I don't know where I can pull this. The other one is again, it's on a 5 minutes. This captures I think we have covered it near R1 and previous day high. It's a similar trade. Whenever you have a candle opening near previous day high, this green dots, previous day high, and gets rejected, you should target CPR. So it's the same thing. I have covered those steps. R1 and previous day high, S1 and previous day low. So you need to be flexible when the price open. Most of the time they will be very close by, but either of them, price is accepting and breaking R1, market will go up. Price is getting rejected near R1 and near previous day high, it will touch CPR. Okay, so that is one more thing I wanted to cover. So a lot of people, we have something called as evening star, morning star. We keep talking, right? Now, this is again based on that kind of setup. It is everything, whatever my trading strategy of opening 5 minutes is based on previous day high, previous day low, all these things only. Now, what is this evening star setup? Now, this evening stars setup is nothing but something like this. I don't know how many people know evening star. Okay, this is a evening star. Got it. You have one big green candles or 3-4 green candles. Then we have a doji kind of candle and another red candle closest below it. We consider generally it as an evening star. Now here, when this kind of things happen near previous day high, again the target is CPR. Again the target is CPR. Hope you understood this one. Clear? Any questions so far? Feel free to ask question, guys.
Uh, Raghav, which is better, the 5-minute time frame or 15-minute?
No, ideally for our trading, we consider 5 minutes. Good that you reminded me. But I do watch 5 and 15 minutes both. The higher time frame has more weightage. My trading time frame is 5 minutes. 15 minutes. Why do I watch 15 minutes? Okay, so this is I'll just tell you. You can split the window itself there. Watch Friday. This is a Morobuzo candle. Then this red pin bar kind of stuff is a negative candle. It is forming near resistance. So Friday, this price action is giving me a confirmation within a 115 minutes candle. And the next 15 minutes candle is going down. This 15 minutes candle is enough. So 15 minutes, what exactly it says is, it gives you a better idea. What is the trend? How is the trend? Okay, this is a very strong candle, 3 big bars, and then one small red candle inside red candle, which I called outside reversal. So this outside reversal is not visible here. So the patterns which I discussed, wherever you get this outside reversal, 5 or 15 minutes, I take. But my trading time frame will be only 5 minutes. CPR above CPR, above R1, trendy. This is another thing which I wanted to cover. Before that, have I answered your question? Is that clear?
Yes.
Okay. So I was telling about this first, this candle, right? Trendy candle. Now this is opening from central pivot range. Now what if this candle originates from previous day high R1? I told you it will be a trendy day. Okay, say some people, okay, if I mean I am against using a weekly and monthly CPR, but if you want, you can use it if you're not confused, just for the opening 5 minutes. In the opening 5 minutes, similar to this candle, which is originating from the CPR, if this candle is originating from any pivot with a decent candle at the opening, you have a high chances of trendy day. That one, add it. Not only CPR, if the opening origination is happening from monthly CPR, weekly CPR, or you have a previous day support and resistance. So even then, this will be a trendy day. Okay, that is one trendy day. Now here, I forgot to explain you guys about one more important thing. Okay, this is something which I keep posting you. Now, what is the idea of this? Why I told you that CPR is the heartbeat of the pivots. Why it is a heartbeat of pivots is Frank Ochoa had programmed, you know, the formula, previous day high close. Now, these CPRs are developing CPR. Okay, developing CPR means this is a CPR for tomorrow. So the Bank Nifty CPR is for tomorrow. Now, while we calculate the CPR, we came across this again based on price action, narrow pivots. You might have heard that most of us will be talking about narrow pivots. What exactly these narrow pivots mean? See, this is a wide pivot. This is a narrow pivot. This is a narrow pivot. This is a narrow pivot. How do I know this is a narrow pivot? So based on say last 2 years back testing, make a note of these things, guys. A narrow pivot for Bank Nifty can happen up to 70 points wide. Okay, up to 70, which means this is 34,514. This is 34,481. So 20 plus 14, 40 points like this, up to 80 points, 70 points, you can have a narrow pivots. Now, what exactly these narrow pivots means? Based on the previous 2 days, previous days action, this CPR is formed. You already know it. Now, what was the previous day price action? Previous day price action is very narrow. This is 2 days, right? Right? Oh, previous day price action is very narrow. So market was trading in a tight range. Then you get this narrow pivot. So whenever you see this narrow pivot or a price action, I explained you earlier. Okay, it's very close by, wait. These are all again high probability. What was happening here? Last 2 days. And what happened after the breakout of that? So you can anticipate a breakout whenever you have a narrow pivot. Now for last 2 days, what are we seeing in Bank Nifty? Sideways range. So tomorrow, Monday opening, there's a high probability that there might be a breakout. Which side breakout happens, whether upside, downside? For that, I have already told you. Whenever a price opens outside the previous range, R1, previous day high, and if the price is accepted, boom, it's going to go up. So this is how you need to read the pivots. Okay, it's not just numbers. And the psychology of pivots is now tomorrow, today itself, I know I'm telling you there is a high probability of trendy day. Now, is it a rule written on stone that tomorrow should be a trendy day? No, nobody knows. But using pivots, we have an advantage. We can forecast what kind of the day can be tomorrow. So how does the, I mean, how can we confirm that? By the opening price. Allow the market to prove or disprove your assumption. Now you know it's a trendy day. If markets opens above R1, I told you, right? So come back to here. So market opens above R1, you have a pin bar or you have a green bar, then you know you have a high probability of market going into a trendy day. Understood? This is exactly how you need to do. Okay, see this one. What is the count? 35,125, 35,091. So 9 plus 25 is 33 points, thin pivot, narrow pivot. Where is the price opening? Below S1. You have a solid red bar. What kind of a day it is? Trendy day, because this is where the initiative participants are coming. Look, whatever I'm telling, earlier I thought it's 45 minutes, maybe in between I might have gone a little fast, but what I'm trying to tell is, when you're reading pivots, consider supply and demand. Who is buying? Who is selling? Now for that, to make it easier for you, this comes first. This comes first to me. When this happens above S1, I know initiative participants are here. They take the initiation to take the price to new highs or new lows. So I need not fear. What is my fear? My fear is price closing above previous day low. What is the gap? If I see a big candle, sometimes I enter within first 5 minutes. I will not wait, because this is a very big candle in Nifty. Say with this pullback also I can enter, but stop loss I have to keep somewhere where the price has opened. So this is midway. You can technically, people who trade professionally, their stop loss will be very wide with this big candle, isn't it? This is around how many points? 100 points, 713, 900. So yeah, more than 115 points, the single candle. But still, this you will learn by practice. So understood. This is another method which I wanted to tell you. What method? Forecasting the tomorrow's upcoming day, and then taking advantage of price opening near R1 or S1, then you have a very high probability to enter and make millions or lakhs. Now this is how most of the traders make use of pivots here. One more thing. So using pivots, this is again an assumption. Okay, say you have 2-day pivot. First I'll tell you, this is a pivot. This pivot has opened here. Now this is yesterday's pivot, Friday's pivot. This is Monday's pivot. Now Monday's pivot is below Friday's pivot. Now what does this indicate? Prices are down, right? Marginally down. Base have taken the prices down. Now what is the bias tomorrow? The bias for tomorrow should be short, because Monday CPR is below Friday CPR. No, again, I'm not telling, this market is a probability, but before, how you have to prepare for tomorrow's morning opening trade in Bank Nifty. Okay, tomorrow morning I have a thin CPR and I have a downward bias CPR. We call it as lower CPR. So which means that I have a high probability, if market opens somewhere around S1 or previous day low, to take low and keep the stop loss above the previous day low or above the S1 and hold it firm, because it may turn out to be a big profiting day. Okay, these are the other highlight of this is the narrow pivots are some of the days where you can make money for the entire month. Okay, that is how they consider. Remember this. Similarly here, this is Fridays, this is Thursdays. We have a upper CPR. So the bias should be bullish side. Our market is going on, has a upper CPR. We may see prices going up. But did prices go up? It broke the CPR, took support near previous day support, and then went up. It was a range bound. Now, when this happens, the way you need to understand, or let me put it across this way, like tomorrow our bias is downside, market opening at S1 or R1 is what we need to do. We need to watch out. S1, near S1 is what we need to watch out. Assume that price opens above R1. Price opens above R1 and price is also accepted. Now that is again a high probability trade because I've already explained it, but it becomes even more high probability because overnight between Saturday and Sunday, something changed where buyers and seller sentiment have been greatly affected, and you see a lot of bulls above it. Now, what I'm telling is this is subjective. Now, most of you guys may not be able to understand this concept. You may say, okay, CPR is narrow, I have a bias toward downside, I will just go down. But if market reverses, you feel victimized, thinking that somebody played you, somebody marked you. But there is nothing 100% guaranteed in the market. It is always subjective. You have to be flexible and be ready to read the market conditions. Okay, anyway, little gyan. I'll move on. Understand this thin CPR, and this is one more CPR. This also I had told you. What happens is it's like an inside bar. Now this CPR is within previous day CPR. Now imagine this CPR was this days. 27th CPR is this. I'll show you on the chart. What happened to my CPRs? Not this one. Yeah, this one. This two. Now this CPR is within the previous day CPR. Like whenever you have a broader CPR, again guys, this is again a probability where you can see upcoming day, you can predict the upcoming day. When you have a broader CPR, that means the previous day you had a very wide trend. See, this CPR extends wide trend. Why? CPR is calculated based on the previous day high, low and close. So naturally you will have a wide CPR. When you have a trendy day, what will happen the next day? It will be a range bound day. I mean, very rarely you get back-to-back trendy days. 2-3 days after trend, you will always have a what do you call contraction. So this is exactly what happens. Now see here, when you have this day inside CPR, this is first of all a narrow CPR. I'm not talking about the width here. Understand, width is different. Narrow CPR up to 70 points, from 5 points to 70 points in Bank Nifty, expect a trendy day. You can have 300, 400, 500 points trendy day on these CPR width analysis. On the inside CPR, this happens very rarely, but whenever this happens, even that day will be a trendy day. One of the best days I had told you. So inside CPR. Outside CPR, we had a trendy day on outside CPR, but by and large, the outside CPR is nothing but this should be a range bound day. Okay, on that day, price originated from the CPR. We had a trendy day, but what I'm trying to explain you is how you can forecast the trend using the CPR analysis. Inside CPR, outside CPR. This is a thin CPR, small. So I know I have a trend here. See, this was a narrow CPR. I have a trend here. So you can understand based on CPR analysis and be ready. So say what happens if the price opens within S1 and R1. I have given you the strategy. If it opens within S1 and R1, target CPR. It will happen. If it is outside R1, S1, price accepted, market will just boom. Any questions here? Okay.
So Raghav, it's a CPR by KGS, and what is that? Like some may not know
Sure.
which all.
Yeah. You can take it, guys. So what I have done is this has got a monthly, weekly CPR. I don't advise you to do that because it will confuse you. The initial stage I explained you, right? The price action, that is enough. That is enough. So this is CPR by KGS. I have used daily pivots. What I have done here is I used the standard pivot from TradingView. I can use I have removed this. because it creates a line. Okay, I'll show you what exactly I mean. Do you see this line? So these follow-up lines were coming, so I just wanted to beautify a bit, so I removed this. But this is enough. You can use CPR by KGS. Okay, there was one more very important strategy. So this is where I use the Bollinger Band. There are two ways I use the Bollinger Band. I mean, one of the reason is, let's assume that we all as a beginner, we get attached to a lot of indicators. Like that, I'm emotionally attached to Bollinger Band and moving averages. All right. I can show you the moving averages strategy, but that we will keep it some other day. But if this will be too much, that's the reason I don't want to overburden you. So I don't know whatever strategies I have shared. This is one of the very favorite strategies which I have. Okay. You might have seen me taking a trade in the opening candle itself. So the reason, I mean, Bollinger Band, I don't advise you guys to mix it with CPR. Remember, this I use only for opening, nothing else, only for opening. Say for example, somewhere here on the other day, last week, I took some trade, right? One of the characteristics of Bollinger Band, if you're new, you already know that based on the price, the way Bollinger defined using the moving averages, everything median, price always moves within the band. It breaks outside the band, it's considered as trend is on the downside, but eventually if the price is outside the band, it has to come and close inside or near. So my trading style at the opening would be, say if there is a huge gap up, I'm not able to show you. Okay, see this one. On this day I took the trade, but I exited here itself. Till here, I think I exited with 7,500 profit, but I had almost around 20K profit here. Huge gap up near S4. Now here, two things you need to remember. Before Bollinger, I want to explain you. CPR has more potential in price movement by and large, okay, at a high probability of 80% of the time. Whenever the price is opening between R1, S1 or slightly above R1. So sometimes prices open like this near S4, or sometimes prices may open at R3 and R2. That is way too high, and then market might quietly move sideways. Do not be overly bullish beyond R2. Do not be overly bearish beyond S2. If there is a huge gap up, there might be days which can be bullish, which can be bearish, but by and large 70 to 80% of the time it will be a sideways market. So the more potential of you guys making money using these pivots is whenever a price opens near S1, and if it is accepted, you have a trendy day. If it is rejected, you can reach to CPR. And there is some other things I'll tell you, mean reversion. Okay, now coming back to Bollinger strategy, guys, I don't know how many trading methods I told you. This is one of my favorite. If there's a huge gap up near S4, I know market has to pull back. But still I will have my fear, because you don't know, it can go down and come back. So to remove that fear, I put this Bollinger Band. Okay, we have a big expansion. Beyond expansion, entire price is opening outside the band. Price itself, remember, it is not breaking. The price opened here. Do you see this green dot beyond S4? And then it went down and started pulling back. I wait for 10, 15 second, 20 second, so that I don't get trapped. Once I saw this wick, once I see these wicks, I enter it. My target is not pivot. If the price just comes within the band, I exit. Somewhere, it's like a quick money. It won't even last 1 minute. Within 1 minute, most of the time prices booms, and then it might go down. But this is just for opening for 1 to 2 minutes trade. Highly risky, but high reward. This keeps happening. Okay, upside or downside, I can show you. See here. Here also I took. Price is opening above R1, but it was beyond the Bollinger Band. Boom, came down. Why it did not test the CPR, guys? Don't be obsessed with your analysis. Always watch the left side. This was the previous day support. So more or less it acted like a support and pulled back. Near that support, you have something like outside reversal candle. You can read all the candles which I told you and then work. But whatever I have shared, they are high probability trading. Now here there is one more thing which I share. Most of the folks who ping me, they know it. But I don't want to confuse you. Adding two things or three things will be a big confusion. Not sure how many of you have heard about 200 MA. Before that, sorry, Virgin CPR. I wanted to cover something called as Virgin CPR. See this one. What is a Virgin CPR? Virgin CPR is nothing but it is a CPR where there is no price action. No candles have touched it. Okay. Now, these Virgin CPRs are similar to gaps. The psychology behind this Virgin CPR is market moved up, similar to gap theory. So why a gaps gets filled or why a gaps get tested? Now, before price continues in a direction, there will always be a price action. It's not only gaps or Virgin CPR. You can see here. Upper CPR broken by a green candle, bull candle, market could have gone straight away. But market comes back here. Maybe the bears here are not selling here. People whoever took a booking the profit and people who missed the opportunity in this big green bar in the morning thinks market will go down and they enter seeing the first opportunity of the red candle. But they will not have enough strength because price action has clearly shown near CPR. You can go low only below this low of the candle or once the lower CPR is broken. But novice traders enter above CPR because of the morning trend. Oh, for whatever reason, this is a big red bar. Let me enter here, market will go down. So they want to capture maximum money. But the way you need to read is this is a CPR. It has been taken support. See the outside reversal here. Big red bar first. Green outside CPR. You know with this candle market will go up. And you have to wait because market always tests. See, this is the second one. It tried to test. Say, for example, if this red bar would have gone lower than this green bar, then the psychology of traders changes because here base was stronger enough to negate the outside reversal bar or the inside bar. Inside bar is a pause in the trend. Okay, by the way, it's a reversal and pause in the trend. But if the inside bar is again taken down, then this trend would have continued further. So the way you need to understand is, okay, this is a red bar, but where did it close? It closed about the inside bar. And look what happened next. You have an equal green bar. Now come back to this, combine this red bar and this green bar. When you combine this red bar and green bar, what will happen? You will get this bar. Do you understand how you can use these candle patterns to read the market? Yeah. You have a red bar, green bar. When you combine, you have a pin bar. So don't just watch this green bar. Combine this with this red bar. When you combine all this, what will happen? You still have a green bar and still it is an inside bar. So you have a solid confirmation. You can go confidently take a trade here. What is your stop loss? Below the lower CPR. What is your target? R1. But once market goes up, you will get short here. This is because people who missed here. But anybody who knows if you have entered here, if you hold, it will go up. Now look what happened here. Near the CPR. Bulls pushed it down. What was your sign? Do you see this sign? This is a T bar, reversal pin bar, near upper support. Here again, you can deploy. If you have taken two positions here and you're waiting for R1 did not hit, market is reversing. Most of the folks with these two red candles, they exit because it's option. The premium erosion is there. But understand, you can use the same concept in any stock market. Whatever I have shared today, right? You can use it in stock market, bank nifty, any options. It's the same psychology. It's supply, demand, buyers, sellers. They are the one who is making the decision. So bulls, okay, with this red candle, strong bearish strength. But what does this pin bar near CPR signifies? Whatever the strength you have in this buy zone, there are a lot of people buying. On top of that, this is a beauty of CPR. A CPR always acts as a support. Near support, you have a strong buying area. So take it. Wait, did it go straight away high? No, this will act as a double top. It's a swing high because market reversed. One more double top. So market again pulled back. This is price action for you. But what is the trend? Above CPR, it's always an uptrend, but still use your common sense. What is a trend? From here, what is the trend? I'm not going to use any moving average. Trend is upside. So you have to go with the trend. So even if it is a double top, it is going to break. Why it will break? Not because it's an uptrend, because of the price action you see near the CPR. This is a lower high. Bears tried to push the price down, but they did not have enough energy to break the lower CPR. So your stop loss is here. That is the reason entering early with high probability test will always save you. You can just wait. Yes, this takes 2 hours. Do you have the courage to wait 2 hours? Many of us, let me consider myself as well, have the courage to hold a losing stock for 2 hours or till entire day. But for a winning stock, we tend to book within first green candle or 2 candles. Once the red candle appears, we book the profit, we exit. See what happened next. Price push. This is again a second lower high. Lower high, lower high. Market went up. There are some traders like me, who is working. I work, I come back, probably entered here. On this day I entered. I booked my profit on top of the upper CPR. I didn't even wait. Then I was working. I saw this pin bar entered. Okay, near this double top again, I'll exit because I'm a scalper. I cannot wait for entire day or be a full-time trader. But I know in my hindsight or in my mind, I have a high probability trade when this double top is broken. So here I entered, here I entered, here I entered, booked small points. Then I wait patiently until the double top is taken because R1 is a resistance, right? R1 is a resistance. Near R1, I have a double top. Who knows what will happen? And what was the previous day? Previous day was a range bound. Market did not so high. So you need to consider the overall context. Then I wait. Once the R1 is broken, I will enter. I may book some more points near the midpoint of R1 or whatever points I have, or I may target R2. I mean, this is generally how the trading works. Got it. So Virgin CPR, I was talking, kindly deviated. Sorry for that. I wanted to elaborate this, which I had missed. Hope it benefited. Now, what is this Virgin CPR is? Like similar to gap theory, market to remove the and shake off the weekends, like here, right? Market came down, it did the test here. If there were strong bears, market would have broken. Before market moves up, they are testing again to see there are any bears left. No bears left because strength is less. It's only bulls went up. One test, this is second test. Again, they're testing, or as I explained, they are booking the profit and seeing. Went, some people booked the profit, new bears entered, come, and again the ones they saw all the bears become bulls, it went up. This is the way the trading happens. It's not only new traders entering, the existing traders booking profit, and counter trading. This adds to the buying pressure or selling pressure. Now, similar to the same test, this virgin CPR will be tested within the next few days. By my experience, within next 2 weeks, it will be tested. Within first week, the test probability is very high. But I mean, instead of probability, let me put it across. This will be tested. So how you can make use of this virgin CPR? It acts like a magnet. So market is going up, going up. What happened here? 1 minute. It's stuck in a range. So rather than let me put it this way. It's not able to take off the highs. Now this is where once this starts happening, you should know if there is a gap or if there is a virgin CPR, market will come and test. Personally trading with pivots, I know for sure virgin CPR will be tested. Look what happened here. Boom. Now let's take an example of more virgin CPRs. See this one. And by default, the virgin CPRs act as a support and resistance, because CPR job itself is a support and resistance. Now, similar to a gap should also act as a support and resistance, gap filling after filling or before filling. But this is not filling. It can test the upper CPR or it can break it. But a test will happen. When the test happens, the price is coming from the top. It should act as a support. And majority of the times, watch for this. It will act as a support. If this CPR gets broken, there is more uptrend. You can blindly go down below this and start making money. This is another virgin CPR, which got tested immediately next day. Got it? And see this one. This is another virgin CPR. After 2 days, what happens? Market opened at S4. So when you have this kind of insight, right? I think I was showing you Bollinger Band. You can just take the trade. It came, tested, it faced resistance, went down. This is one virgin CPR which is yet to get filled. Yes, still market is down. Now, this is one virgin CPR we have for Monday. Say if market goes up, you should anticipate. Okay, there is a virgin CPR upside. So it can go here and face resistance because it's near the high of the market. But you also do this virgin CPR will always get tested. But here we have one more resistance. So you will be in splits, whether to book your profit here is whether to book your profit here. I mean, it depends upon your choice where you want to book the profit. But understand we also have one virgin CPR here from Friday. So having this in mind, you know you can book the profits. You have a target, you can book it. Any questions so far, guys?
Hello,
Yeah,
sir.
Raghu, this recording section will be available. Sorry.
I can make it available, but the only problem is these things I picked from Pivot Boss book. So I can conduct one more session, guys, free of cost. I mean, there is a lot of things I don't know. I mean, I don't have the background of your experience. Hope it is helpful. There's one more thing. Okay, one more scenario. Okay, now I don't know. You guys made note of it. This happens in Bank Nifty. Okay, similar to this. Yeah, see this one. The candle comes from the CPR. Okay, it's a very big candle. So remember, this is, as I said, this is a subjective. The reason why I'm telling this is I don't want you to feel that this is a trendy day, right? Boom. Why this was not a trendy day? See the inside bar. It's a very big candle. You have an inside bar. So sometimes what happens is when you have a candle which is bigger than normal, even on this day, I thought it would reverse because this was a very big candle, jumbo candle. So we need half of this candle. But anyway, whenever you have a jumbo candle, watch for next 5 minutes. So usually based on the books and experts, if a candle for an outside reversal candle, if it is bigger than the previous 20 candles, and then when you have an inside bar, market reverses. So there are two scenarios. One scenario, within 5 minutes, any pivot originating from CPR, S1, weekly pivot, monthly pivot, you have a high probability of trendy day. And you know, when I mean trendy day price, where the price should break S1, R1, acceptance, rejectance, remember this. This is another scenario which I take in the morning based on the inside candles, outside reversal, whatever I taught you. When I have, this is the fourth candle, boom, near the CPR, I mean near S1 it is hit. S1 is a support. We have an inside bar near the support. The next one is a red candle, but the red candle does not close below this one. Still I will wait because it's a red candle. But once this green candle closes above this red candle, I'll be more confident of taking it. You can treat it in a different way as well. So when you watch on the left hand side, you have a support here. Previous day, it's a small support, but still you have a support. This is a buy zone where a double bottom was formed. So this green candle is entering into this buy zone. So I have a high probability of entering here. What will be my stop loss? My stop loss will be this only. This is previous day low. Any 5 minutes candle closing below this, I'll exit. I won't even wait till the low of this, because this buy zone should act as a buy zone. So there's a high probability within the next candle market should hit the CPR. But if it is reversing, I will not wait for the low. I will exit here only because this buy zone did not act as a buy zone. It is acting as a rejection. So there is a high probability of market going down. Let me wait for 5-10 minutes more. I exit and wait. But my bias will turn towards short. This is exactly how I think. Understood? That is one more scenario. There are a lot of scenarios since most of us in our group, we are not from trading background. Our primary job is different, and neither we conduct any training. If there are any shortcomings in this trading, I mean in this training or the sharing session, please do consider that we don't have any teaching experience. But still I'm open. You can post your questions on the chat, whatever questions you have, I can explain or answer your queries in a much better way. Do you guys still have energy to cover? Okay, let me put it. I don't know. This will definitely confuse you, but it's up to you. Since we have time, another 5 minutes, I'll finish off. Okay. So this is the one I wanted to cover. My favorite. I'm not dependent on this, but I'll watch this for a breakout. Okay. This 200 MA and 8 MA. Okay, I'm using Bank Nifty itself. Let me make a little darker for you guys for your understanding. Okay, I have used, let me put 8 MA. So as a beginner, I would advise you practice pivot. It will definitely help you a lot. Somebody was asking me, okay, do you watch 5 and 15 minutes both? Yes, I do watch 5 and 15 minutes was the answer. The answer was because of this. Okay, leave this one minute, guys, 1 minute. So what is this 200 MA, guys? This 200 MA is nothing but a pivot. Do you see here? So suppose you are using a naked chart. This 200 MA, 5 minutes 200 MA is the pivot, daily pivot. 15 minutes 200 MA is weekly pivot. Hourly 200 MA is monthly pivot. Okay. Price above 15 minutes 200 MA is uptrend. Price below 15 minutes 200 MA is downtrend, larger time frame. Again, I'm telling you, you need to filter out what I'm telling. Use pivots, but there is a reason why I'm using 200 MA. So the reason why I'm using 200 MA is 200 MA acts as support and resistance. Whenever there is a breakout of 200 MA, in the combination of pivots, there is a huge trend. Either on 15 minutes or on 5 minutes. See here? Now this is a gap down. You can do your back testing. Whenever 200 MA breaks, you have a huge uptrend. It acts as resistance, goes down. Same thing in Nifty as well. The reason why I'm using this is to capture that big trend. So Bank Nifty did not give any trend in the recent past, right? So I don't know. Hold on. This. Okay, now we are back 5 minutes. So this is another way I decide in whether I have a trade today, whether I just need to focus on work. For this, I use this. So whenever a price is between 200 MA and CPR, market will be sideways until it goes in one direction. Market will be in sideways. Okay. Prices between 200 MA and CPR. Market should be in one direction like this. CPR 200 MA, below that you have the moves. CPR 200 MA, above it you may have some moves, below that you may have some moves. But in between, you can check it. Index, I'm specifically talking about index, it will be always sideways. So why I use 200 MA? To see on 15 minutes or 5 minutes whether it is acting as a support. I mean, see, it's a lower CPR. For me, I need not use anything, just CPR is enough. But adding a CPR 200 MA, I know for sure, okay, it's acting as a support. Just in case if you want. So here I have a 200 MA above, CPR in one direction, market broke, I can take it down. So on a 15 minutes also, you can see most of the times it acts as support and resistance. Basically, as said, I look for breakout. See, market is going up here. Face 15 minutes resistance near R1. I have 200 MA and R1. Most of the traders just trade naked charts using 200 MA and 20 EMA or 200 EMA, 20 EMA. It does not matter. As I said, it's a traders making the trading decision. Okay, you need to understand this. So on this particular day, we are intraday traders. We trade for 5-10 minutes. When you see here, okay, we have a R1 resistance. R1 resistance alone is enough. Okay, and even I told you, beyond R1, you don't need any indicator. Is there a fresh sell zone? You have a fresh sell zone, which was not broken. It faced resistance here, it faced resistance here. So this zone is a high probability zone, and this zone falls near R1 pivot. So you don't need 200 MA or anything, but just in case, if you feel comfortable, you can add 200 MA, because by and large, after breaking of 200 MA, there is a big trend. You can do your back testing. Even recently, we had a very big trend. Where? Near CPR, I think this was in Nifty. And then I mean, this is what I wanted to cover, guys. Not sure how it went. I'll await your feedbacks. Please do ask me if you have any questions. I do have time to answer the questions.
Hello, Raghav sir.
Tell me.
Sir, where should we keep the stop loss for scalping?
Scalping, the entry candle below
Yes,
should be your stop loss.
Considering the premium, sir.
That's what I'm telling you. The entry candle itself should be your stop loss.
Okay,
If
sir.
it goes below that, you should exit, because we are going for scalping, which means you're going for less reward, taking a high risk. Okay. So when you're taking high risk, taking high risk of wide stop loss does not make sense. Okay, like on the other day, I told you, right? I gave a call on Friday. Friday, somewhere here with these 3 candles, I gave a call. I did not want it to risk. I took 1000 quantity, exited here, double top. It may come down. Technically, as explained, you should keep a target for R1. Since I'm a scalper, for 1000 quantity, it was around 2,900 something I made, but it could have given me 15,000. But still 2,900, say for 80,000 or 90,000 investment, will come around 2.53% profit. The way I calculate profit is, what is the percentage of profit for my net investment? Am I having the profit of more than 2%? I'll be happy. See, nobody gives more than 2%. Got it. Going by that, I can make a lot of money. But the catch, I tell you, for most of you, the catch is this, guys. Watch always left-hand sidedness. See if there is any established buy-sell zone. What is the current trend? And in that established buy-sell zone, if the market breaks, who will be at more pain? Who will be at more pain in the sense, will the retailers be at more pain? Can you sense it? Okay, you entered, you took a loss. How much pain you will be? What will be your mindset? You might have experienced this. Most of the folks entering here, market is not going up and down, up and down. Some guy had entered, one of our group guy, he had entered here. What I said was, market is holding this resistance. Do not enter. Just wait for R1 to break. So after R1 break, we had a good trend. What if after R1 breakouts market reverses? It's a possibility. It reverses. When it reverses, do you have the courage to hold it till CPR? Because we are trading in options. There are a lot of variabilities other than buyers and sellers. We do have option Greeks playing, intrinsic value, extrinsic value, time value, everything. So, but these methods have made me consistently grow as a trader. And just to quickly finish off the trade, I'll explain you. See, in stock market, anybody can make money. All of us can make money, but it needs discipline and it needs continuously trading the setup which you're taking. Now, Thursday, this was what? Thursday, right? I think this is the Thursday. Yeah, Thursday. This was Thursday, right? Yeah, Friday, Thursday. Now, morning trade here itself, I had made 10,000 rupees profit. And I did post. My 10,000 was lost with this pin bar in 5 minutes. This pin bar, do you see this? This pin bar. So I explained you so far. Okay, pin bar works 100%. I lost. Expiry, I wait. I can make 15-20,000 easy money because every pin bar inside bar works on expiry. Now this pin bar, ate away all my profit. Why? When you trade the market blindly without context, it happens. So my blind trade was, I will trade all the setups which I have told you, no matter even if I take loss. See, at the end of the day, it is like this. The probability of my setups have 70% and above. Now, if I am investing 1 lakh rupees with the probability of 70%, I can make 70% of the time money. 30% of the time is the loss. Okay. So you have to think that way. Even if you are 30% loss, with stop loss will be very minimal compared to the profit which you are making. Now here, why this went wrong? I did tell this is the market. I became greed. I did not see the context. What is the context here? See this one. After a strong sell off, this was a strong negative candle, another pin bar. But after that pin bar, what happened? Market just boomed. So this was a buying zone, established buying zone, right? Within this 5 minutes, you understand. So when you make a mistake or when you incur a loss, you should see it immediately. I realized immediately, okay, this was a high probability candle near previous day high. But is the context helping me? No, the context, we have a much better pin bar here, which should have taken market till CPR, because its price is between R1 and previous day low. I expect it to hit CPR. So when I was expecting, so that was playing, the psychology was playing in my mind. So when I entered here, my expectation was again CPR, but I failed to see this context, because this was a very strong bearish. This is strong bearish. This pin bar is a strong bearish. Despite these two strong bearishness, people were buying. So my safe bet was, with this pin bar in options, I should have waited for the low to be taken out. After low to be taken out, my target should have been this, between these two area, because these are double top and a gap. So maybe gap could fill till this double top, or it can go here. Watch, take the target here, book half of the quantity profit, hold the next half to see whether it hits here, or completely exit here. Don't worry. Do you understand within pivots how to see the context, how to trade? Now this understanding is not easy. It comes at a price. I'm not trying to scare you. If you're not disciplined, you will lose big time. Like said in the beginning, in my first year of trading options, 4.5 lakhs was lost. I knew nothing. I was using RSI, I was using ADX. Still, I have the emotional contact. I don't use anymore. But since I'm using, say, I have RSI, I have ADX. You don't need anything if you're using pivot. I'm nearly there. Don't even watch. Earlier, I was using MACD as well. Bollinger Band. I removed MACD. I removed Bollinger Band. If you have pivots and the powerful setups which I explained you, right? It's very, very important to understand and visualize the market this way. This can be a daily candle. This can be a 1 minute candle. This can be a 5 minute candle. So this is how the first 5 minutes candle happened. Second 5 minute happened this way. Third 5 minute happened this way. So when you start practicing this way, you will really make a lot of money. Any other question, guys? See, this is what I have mentioned. The true basis for profit is to buy in the areas where you know others will buy after you. Understood? There are two books which I will refer you. One is The Secret of Pivot Boss by Frank Ochoa. Other one is YTC Price Action Traders. Now this is from YTC Price Action Traders. So he says, I mean, not only he, whatever I explained you, to buy at areas where you know others will buy after you because they are buying. Now what exactly it means? It means to sell in the area where others will sell. See here, put a line here. See where market sold. This is a Friday. This watching your left hand fresh zones. Now if this candle was broken here, I would watch the latest one. So latest one is this one. Okay, this is not broken. This is not broken. Nothing is broken. This is a fresh resistance. Still it is fresh. So there buyers, I mean sellers will be waiting to take the market down. So this visualization can come by practice. Start practicing. The other reason why I wanted to do this was I wanted to share the candle patterns with you guys so that from tomorrow when I'm giving the candles, when I'm giving my calls, or say for example, RP will give his calls with Elliott waves. Amit might give his calls with hedging. We might give his call purely by trading psychology, or anybody. We have quite a talented folks in our group. When they give the call, I want you to visualize that particular call, opening the chart and seeing, is there a supply demand? Where are the supply demand? I mean, supply demand means buyers and sellers. What kind of trading decisions the sellers might make or the buyers might make? What will the probability of them making a seller's decision? So the seller's decision make, this is exactly where they sell. They don't wait in options. So it is a big pin bar. When you trade here, you have high probability of making money. Even if your stop loss hits, I said, what exactly it means? It might go up till this resistance. So you can recover your money. You won't go into too much of losses. This is exactly what I wanted to explain you. Go back, think everything. If you guys have any questions, please do post. I'll be more than happy to answer your queries. Hope I made any difference in your trading journey. We can keep having these kind of sessions in the upcoming week, which can benefit everybody. Another 2 minutes, guys. I'm open for questions. Any questions, you can clear your doubts, or I'm done. No questions. Thank you, guys. Thank you all for being patient. Good luck.
Yeah.
Thanks, Api.
Thanks for the session, Raghav.
Thank you.
It was a great session.
Thanks, buddy.
Yeah, thank you.
Bye-bye.
Yeah,
Bye.
bye.